All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Glad to be with you this morning and every morning, 9 a.m. Eastern Standard Time, here on the YouTube channel. If you can hear my voice a little more crisp, is because I actually got the mic in yesterday. So check this out. If I just move it a little bit, got that mic. It changes colors here and there. It's kind of like a gamer mic, but it works. So hopefully you guys can hear me nice and clear now. Good morning. Good morning. I didn't put the headphones on. I don't think it's much need unless we do some podcasts or whatever for outside sound, but I think this is pretty good. I tested it last night. I got a couple videos to do this weekend. I know you guys are ready for that content. I got you. We got a weekend coming up. So as we know, this was a short week this week in the market, and we traded it accordingly. So we'll recap the week again this past week over the weekend. And we'll get that out to you. So make sure you don't miss any of those videos. Turn on notifications and subscribe to our channel. Really do appreciate it. Like these videos so we can grow the channel. That's kind of my resolution for 2024. I really want to grow this channel to get to 10,000 subs. I hope my goal is in 5 years to get one of those really cool plaques. Maybe not the million one, but I guess there's a gold one. It's kind of like 500,000 in subs. That'd be cool. So if you guys want to share this YouTube with anybody, guys, it'd be much appreciated. That's really the only cost of admission. It's just to kind of spread the word. So again, thanks again, guys. January 5th, 2024. Glad to be with you. Dow futures down about 70 points off the lows. The NASDAQ down 38. S&P 500 down about 0.17 this morning. The Russell down about 0.75% at 1958. The dollar index, again, the dollar being higher, 102.68. Remember, we were just around the 100 handle. That's up about a quarter point. Dollars up, stocks go down. I mean, we've kind of talked about that relationship for a while. Even the VIX is red. So again, we can't use the VIX correlation. I would say the dollar is probably a stronger leading indicator for stocks. So again, we're going to go ahead and chart that here together. The VIX down 1.5% at 1391. Crude oil, 73.42. Up 1.69%. Gasoline futures, $2.12, up 0.77%. Even with the dollar being higher, crude is higher. And really that's because of I think it was I guess it was kind of like some Middle Eastern port or something like that. The Red Sea or something like that. I have to read that exactly where it was. I kind of forgot what sea it was, but there's some kind of blockage out there that's slowing crude deliveries. So again, futures market just runs with it. Gold futures are flat, 20.50. Silver futures up 0.53% at 23.30. Copper up about 0.31% at $3.85. And again, these commodities are up even with the dollar being higher. So that's interesting. Euro dollar down about 15 pips, 109.30. Dollar yen 145.38, up 72 pips. Dollar Canadian dollar up 7 pips at 133.55. Pound dollar 126.60. That's down 22. Bitcoin 44,385. It looks like that ETF approval is imminent. But here's the problem, guys. I fully expect it'll be a sell the news event. That's just kind of how it goes. The ETF thing feels like it's already baked into the price. Guess what? Bitcoin's going to go up and down. This is what I tell everybody. Guys, forget finding a price. Yes, we've talked about price targets. But at the end of the day, with such a volatile asset like Bitcoin and Ethereum and crypto, it's just easier to just dollar cost average over time. Average a good price. Just put little by little. You don't have to bet the farm. I remember I got a DM about asking me, what would I think about a friend asking him, a friend borrowing money from the bank at 11% interest to invest in crypto. And I said, absolutely not. Like, that's pretty much the worst thing you could do. Now, some people may say, oh, but there's leverage in the stock market. Yes, that's true. But they're not as volatile as crypto. Crypto can be wiped out, on a Sunday at 3 a.m. At least stock market in general, we have an hours of operation. So again, guys, with crypto, let's not get too wild on that kind of curve of, fully greed, I'm going to do dumb things, to fully afraid to get me out of crypto. I never want to hear about crypto again. It's kind of nice to have a medium balance in that sense. Again, this would be my meter. Apologize. All right, so Ethereum down 1.41%. That's where we are this morning. Top of the morning, NV. Jeff, good morning. And Ryan says, we bounced hard. That's what we did. Let's take a look at the S&P 500. 4,700 here. Pretty much in line with the 13th of December's level. And again, bounced off that pretty hard. There was a major bet, trader bet, or a call that reported by Bloomberg that was putting, I want to say, actually, you know what? I have it here. Let's take a look at it. I was trying to remember the exact, here we go. Treasury options target 4.15% 10-year yield before Friday close. So again, a massive bet that treasuries will get slammed. That's TNX, and TNX right now is at 4.048. So slightly not there yet, but the day's not over, but we are starting to get a bounce after these NFP numbers. So let's take a look at that number together. Let's see it. Okay, we have 216,000 jobs added. 175,000 jobs were the estimate. The previous was 199,000. So it's still growing. Unemployment rate 3.7%, estimate of 3.8%. So that's lower. Average hourly earnings month over month 0.4% versus a 0.3%. So jobs are growing, wages are growing. Unemployment is going down. Why would you want to cut rates into this? Remember, guys, cutting rates is stimulative. That you do that when things are bad. That's why you do it. You got to hold on to that ammo. So this idea that we're going to get all these rate cuts, I think people are really setting themselves up for disappointment. How's this? I'll change the translation. Rate cuts to me is the same thing as someone calling for a recession last year. Those economists. And why do I say that? Because in a sense, in order to get rate cuts, you kind of want a recession. In a sense, that again, that's something that's stimulative. That's inflationary. When the jobs number is this strong and wages are going up, if anything, you need to be tightening. You shouldn't be raising. But I digress. That's just the economic side. The basic stuff in economics. This is what it is. I don't understand. I think it's wishful thinking to kind of prop up growth and AI maybe. But I don't see a rate hike happening in March. Not with these payroll numbers. I mean, if we had a really tough payroll number and it was down, yeah, different story. Okay, maybe we need to balance. But the jobs market is strong, very, very strong. I mean, historically speaking, strong. We're talking about 36 months of consecutive job growth. That's pretty good. That's pretty good in terms of in line with economic booms. The last one being in 2012 to 2018. 100 months. So again, that ended with COVID. Fed funds see about 58% chance of a March cut versus 68% cut before the data. 127 basis points versus 136 pre-data. Yeah, I would assume so. When you have these kind of job numbers. And again, this is good news. This is not bad news. People working is a good thing. It depends on the perspective. If you're some kind of, Fed fund futures trader, yeah, you kind of want people to be unemployed. So that's why I wrote this little joke here. Hope for mass unemployment for rate cuts, hope for a strong economy, and rates stay high. Pick one. Pick one. So if you just want the economy to be strong, you're not going to get rate cuts. And if you want things to collapse, then that's what you're hoping for more rate cuts. So there we go. Nice little bounce here in S&P. Let's take a look at NASDAQ together. NASDAQ in terms of support, yeah, remember you have this gap fill here. I guess this is the rollover of OPEX. I want to make sure that is the case. Is this still the gap fill? That it is. Yeah, this is your contract rollover. It wasn't just a gap up. We didn't get some great news or something. So still the target if we're looking at NASDAQ for more downside. I would say break below 16,350, 340. You got to break the lows of today in order to target 16,124 for a swing. I'll get on the GAR radio later after this video, and we'll kind of go over some levels with the futures guys and see what we could do. But let's be real, guys. It's a short week. Look, this is the actual volumes. They've been dry. It's not been really to get excited for. Just in general, everyone's going to get kind of back to work on Monday. So, use this week to kind of take advantage of what you need to take advantage. And we're 2 for 2 this week in terms of options. I mean, I couldn't be happier. Just don't lose. That's my resolution. Every single trade needs to win. That's it. I don't care how much we make. I just care that we did not lose. So we're going to be extremely tactical this year. We're not going to just take risks just to take risks. We're going to be very calculated, and we're going to make sure to be very precise and write things down, obviously, on our trading journals together team. And then I'm going to go over it every week. We're going to make sure 2024 is going to be your best year trading. That's our goal this year. And I think by doing these videos, reiterating some of the stuff that we're talking about, We got a couple of videos coming out as well in terms of kind of the strategy for the year on the macro side. That's going to be a fun video. And then I'm going to go over the whole 2023. I have the whole spreadsheet already set, so we can actually go over every single month, every single quarter, the whole deal, the ups, downs, the lefts, and the rights. If you are somebody that has been thinking about joining our service or even just being on the server, that's probably the video you want to watch the most, because I'm going to break down exactly kind of how the year went as quick as I can, obviously. Let's see. Let's see the questions out there. I am sick how hard they bounced it. I was shorting, counting my money. Oh, man. That's just the way it goes sometimes. I mean, the assumption or the expectations don't get met. Again, we've been down, all week? Every single day. You're going to get some kind of relief bounce. I fully expect next week we get some relief rallies. Again, nothing crazy. Just a little bit of a bounce to kind of frustrate everybody. January, February, March, guys, I'm not expecting much. This idea of this rate cut stuff, if that's what we're hanging our hat on, that ain't going to work. We have to check out earnings coming up in a couple weeks. The banks are going to start. That's really going to set the tone. The Fed, I mean, I'm not banking on that being, getting that rate cut or whatever. What I'm banking on is that the earnings are justifying the stock prices. If those earnings do not come on in line, oh man, there's going to be some selling and much needed. Fine, fair enough. Reset those premiums. I'm with it. But we're going to keep an eye on earnings. That's going to be more important for everybody because all we've been getting lately, March and December, is what we call multiple expansion, meaning the price has gone up, but nothing else has changed. Apple didn't make new stuff. They didn't make more phones. Microsoft didn't acquire another ChatGPT. Amazon didn't make more warehouses. Like nothing has changed other than the price. It's the same jacket, just higher price because people want it. Think of it that way. There's no extra sequins or diamonds or anything like that. Nothing that makes it value. It's not autographed by anybody. It's just a jacket. But demand drives the market. So that's why a lot of people tell me, how can a name like Carvana be up? That company's terrible. Supply and demand, that's what the market is. It's not rational sometimes. And that's okay. But the idea is to learn why it's not rational so you can take advantage. It's kind of like building an edge. That's the deal. A couple of names that I talked about yesterday. DraftKings. We have the alert at 33.61. We went ahead and filled those calls with the premium service. And I think it was a freebie for everybody. Yeah, we filled the 34 calls for March 15th at $3, at $2.99. So again, we're pretty close to where we were. We got to 33.61, waiting for that break again, but we pulled back, as you know. The stock was still up this morning. Let's see if we can go ahead and revisit 33.61. We have 3 months on this thing. Again, we have an earnings cycle in between. There was a lot of volume on that option trade, on that contract. Plus, we get the benefit of the NFL playoffs, the national championship game on Monday. So let's see if maybe DraftKings gets a little bit of a boost or see why that volume pushed in those calls. Someone knows something? Let's just go ahead and ride it. We got time. That's the best thing. Even with this choppy, low volume stuff, we're not going to be too concerned. So that's what I'm looking for moving forward. Is 394.10 QQQ support? Let's take a look at it. Right around 392.53. That would probably be it. If you're looking to short, let's just say, you have to break 393.68. That's the wick low. If you break that, then the 390s would be in play. And then for that, I would do NQ short. But I really believe that we're starting our setup for a reflex rally. Not because anything is better. It's just that now the volumes will pick up. You're going to get some dip buyers in tech. It's just the way it goes. So that's what I fully expect. Now, if we pull back more, fair enough. But I fully believe today, going into Monday, I think we're going to bounce a little bit. We're going to get just a reflex rally, meaning just technical, just get me out. We shorted all week, for example. Now it's time to buy. And this is why you're getting this bounce. The news that came out was good news. I mean, people working is a good thing. I know. So you would think, we should be soaring. And I think that's why we're bouncing back. I think kind of traders are looking at it like, hey, good news is still good news. I mean, unemployment rate going down, people working, wages are up. I mean, we want people to consume. That's kind of the driver of the economy. But we're so caught up in the minutia, the Fed. let's be real, man. A good economy is a good economy, and that helps everything. That helps everybody. Rising tide lifts all boats. Level to buy BABA for long term. Ooh, good question. Let's look at it. This would be like a China bet, obviously. Okay, you're right on the 20-day moving average, but you're actually below it now. The first marker I would say where I feel, okay, comfortable to even trade it would be above 80. So if anything, for a long-term buy, again, we want to confirm the move. I'm going to say if you're someone that is like, yo, I'm not even going to look at it, I'm willing to take the risk, yada, yada, fine. I would say above 87. The confirmed number to me where I feel, okay, now we're starting to move a little bit where I want to be, it's above 100. I know that's about $25 away, but again, you don't want to catch a falling knife either. And the only reason with BABA is that we have no control. There's no regulation on this name that's American. I mean, obviously this ADR stock, fine, but it's a China company. Who knows what's happening over there? So you're beholden to that. Personally, again, I still like U.S. equities king over everything because of the regulatory body that we have in this country. We kind of have, the laws and all that good stuff that regulate stocks, not these fake pump and dump trash. Yes, you still get in the States, but obviously in China, we don't know. We don't know what's happening over there. And if any bad news in China happens, BABA's going to get hit. And that's nothing to do with the company. It's just the country. So again, kind of the same thing here in the States for like a name like Apple, since it's so commoditized and the SPY and Qs. But I think the issue with BABA is that it's the control factor. Again, a lot of headlines can come overseas that can affect the name that may not have anything to do with the name. So it's just volatile, up and down, up and down. I would say above 100. I know that's not exactly a dip buy, but at least you can confirm some kind of bounce, or at least trending in the right direction. How will this affect the banks? If you're talking about the Fed and everything like that, the dollar needs to come down. So let's take a look at it together. The dollar and yields to come down, that's going to be your big drivers. The big drivers in banks are going to be the mortgage refinancing and people buying homes. What do we need to get there? We need lower rates, lower mortgage rates. So again, the dollar being that driver, you're right here below the 200-day. That's a really good sign. Just stay below 103.40. And we need to break below the 20. We are getting very close to a death cross, meaning the 50-day below the 200. Once that happens, it's going to be extremely important to keep an eye on the banks. The last time we were there was in January, and then we just came down and down and down. And it took all the way till September, 9 months later, to flip to a golden cross. It went from a death to a gold. So again, death cross back in January, pretty close to where we are now. And then at that point, the dollar was right around 105.64. It got to the lowest points at 99. So if we kind of do that analogy, and we're kind of stuck where we are at 103, and we have the death cross, take away $5 to $6, you're talking about you're at the 98, 97 zone. And that's where the 10-year treasury comes down. So again, this is kind of the two-sided here. Do we want our currency to be worth less, less, not worthless, or just to keep the stock market higher? Fine. Or do we want a strong dollar for, imports and traveling overseas? There's no absolute make everyone happy scenario, just the reality. So remember, guys, the dollar going down takes away your purchasing power. But its stocks will be higher, so you'll feel better. But the most part, it's taking away your pricing power. It's showing that the dollar is falling in value, literally. So that's what we kind of want as if we're bulls. It's just what it is. Unless you're sitting on a pallet of cash in your bedroom, you kind of want the dollar to be weaker so, income producing assets gain more. How's that? Is there an ETF that invests directly in China, not in the ADR? I don't know if there's an ETF at all for that. The only one I could think of was like the MSCI China Index. But again, that's even ADR too. I would assume there's probably that hedge fund money, maybe. Maybe they can buy those warrants from BABA, maybe preferred shares. That's going to have to be a question you have to ask a bank. I don't know exactly, unfortunately. That would be interesting, but I don't know if anyone has access to that. Maybe some private banking or something like that. Goldman Sachs probably has access to anything you want. Obviously, if you're what is it? A high net worth individual, HNI. Okay, guys, we'll go ahead and leave it there. I hope the volume came out great this time. So we're getting a little bit of a bounce here. I'll get on the radio. Again, guys, if you're not on the Discord live market blog, you need to join. It's a great community. Glad to be there, and I hope you guys join. Go to our website, www.gar.capital, and let's see if we can add some more people to this community starting the new year. So far, so good. And we got some great videos coming up. I can't wait to do them. And I hope you guys enjoy them. Comment your questions, as always, like them. And guys, please subscribe. Let's boost this channel. Come on. I would really appreciate it if we can get this channel boosted up. Only great things here. So have a great rest of your morning. Enjoy your weekend. Go Cowboys. And we'll see you guys on Monday for the next morning note. And I'll see you this weekend for the next batch of videos. It's going to be a great one. Have a good one, team.